Global equity markets experienced a good deal of volatility over the quarter, but really ended the three-month period in line with where we started. If you think about where we were coming into the quarter, equity market volatility was at all-time record lows. Over the course of the three-month period, we saw a tick up in volatility as there were renewed concerns around tensions heightening between the U.S. and North Korea. But by the end of the quarter, a lot of those concerns had abated within the market, and we ended the quarter again at record low levels of volatility and equity markets at record highs. The real asset equity space was roughly flat over that three-month period. We performed a little bit better than that. We added about 60 basis points of relative outperformance. Within that 60 basis points, we had a little bit of choppiness within our out-of-benchmark real estate holdings, but that was more than offset by continued strength in our large overweight to the European utility segment of the market. Current fund positioning. Today we sit very overweight European utilities. That's a positioning that we have had largely for the last probably 6 months in the fund. We continue to like the way that segment of the market is acting, and we continue to maintain that large overweight. We've switched around some of the weights within that segment of the market and traded around some of the position sizes, but we continue to find the most relative value within that segment of the market. Conversely, we continue to find a good deal of value within real estate, within healthcare real estate holdings in the fund as well, and those continue to be our largest overweights. Going forward into the last 3 months of the year, we continue to be very constructive on the opportunity set for real assets. We are continuing to pull back our weightings in economic infrastructure and continue to up our weightings in social infrastructure, where I think we will probably find the most additional opportunities over the next 3 months is in the telco segment of the market. We currently have some weight in that segment today. It's not as large as we've historically had, but we are continuing to find more and more value opportunities present themselves in that segment of the market. And that's where I anticipate us doing more work over the next 3 months of the year. Thank you very much for taking the time.